Our stocks headed for a Black Monday style crash. As we saw on Friday, the volatility index spiking up 15.55%. And it's not only that, but we look at crude oil, had a massive spike on the way up. Crude oil closed up 7% on the session. However, if we look at the closing price on Thursday to the high price on Friday, we saw crude oil up as much as 14%. Is this going to be the shoe to drop that actually causes stocks to come crashing lower? Now, when we look at the first article right here, Israel attack on Iran shattered stocks early summer calm. Here's what investors should watch out for next. Now, if we look at that article at face value, we can see the SPY actually closed a little bit lower on Friday, but we were only down 1.12%. And keep in mind, Thursday night is when Israel launched that offensive. Then we come over and look at the fear and greed index. Right now, we're sitting at 60. We only dropped 1 point on the fear and greed index, even with all the tensions in the Middle East. Next, we come over and look at the most recent investor sentiment survey. This week came in a little bit more bullish. We actually rose to 36.7 from the previous reading of 32.7. We also see the neutral category jumped to 29.7 from 25.9, and the bears fell off a little bit, coming down to 33.6. Now, if we come over and look at crude oil real quick, this is going to be very important. Crude oil smashed the ABC targets to the upside. Crude oil going up is what? It's going to be inflationary for the market. If we look at the most recent CPI report, we can see one of the contributing factors to having a better CPI report was the fact that energy and commodity prices, gasoline, was all lower. But wait, what if that changes? Because we see now the Pentagon is split over Trump's Israel policy. Is the U.S. about to get drug in? I saw something where a drone was intercepted on its way to a U.S. base, and Trump has already said, if they attack our bases, the U.S. is going to join in, and that could be problematic. However, more importantly, if we look at what Iran is also thinking about doing, what's next for oil? Banks see oil prices spiking as high as $120. Worst case scenario odds rise to 17%. And we can see in this article right here, they're talking about basically Iran blocking off the Strait of Hormuz. If they do so, crude oil prices are going to go rocketing up. And how do you think that's going to reflect following CPI reports? Hopefully all the tension in the Middle East will calm down sooner than later. And let's not forget, we are only 3 days away from the next FOMC meeting. This weekend, we're going to get to hear from Jay Powell, and we can almost guarantee he's going to bring up the tensions going on in the Middle East. We look at what's being priced in terms of rate cuts or rate hikes. We can see the Fed's not expected to do anything until September 17th. After that, all bets are off. And if inflation starts to rise up because oil prices rocketing up, that is going to be very problematic out here for us. Now, the article I showed you guys talked about oil $120. We saw earlier in the week, JP Morgan talking $130 a barrel. I also have seen other news articles talking about $200 or $300 per barrel for crude oil, and that would be absolutely insane. Going back over and look at the volatility index, since the VIX was up more than 10% on Friday, that indicates that either Monday or Tuesday is likely going to be an up day in this market. However, when the volatility index gets in a parabolic run, that 10% rule can basically be thrown out the window. So we got to keep all of our eyes focused on what's going on in the Middle East. Normally, when you get geopolitical events like this, it's nothing more than a buying opportunity. However, could this time be different? Because we look at the SPY, we had this rising wedge pattern. We broke down below that pattern on Friday, and not only did we break below it, but we also closed below that area as well. Now, if we do come over and we look at this on the weekly chart real quick, we can see last week, kind of a shooting star type of candle. We pushed to a new high. We closed in the lower third of the range, but we're still in the upper third of the prior week's range. This is something I do want to pay attention to. Now, we also want to grab our Fibonacci retracement tools. I want to measure from this low here right up to here and look at where the 38% retracement comes in, slightly above that gap being filled. And then if we pull the retracement all the way down from the absolute low, we can see that 38% retracement coming in at 558.52. So if we do start to pull back from this area, and let's just say we pull all the way back to the 38% retracement, that would be roughly a 7% pullback in the market. And I got to be honest with you, that's not that big of a deal. The reason I put up in the headlines, Black Monday stock market crash, not that I think it's going to happen, but there's a lot of chatter online about that. We want to trade the charts in front of us, trade what we see, not what we think. And if you guys want to see how we execute these trades in real time, make sure you join our live streams, and make sure you don't miss the next time I go live. Make sure you subscribe and have the bell notifications turned on for all. This week, we're going to be giving away more prop firm trading accounts. Now, speaking of prop firm trading accounts, I want to let you guys know right now, Take Profit Trader 30% off all their evaluation accounts, no activation fee. Use promo code Epitome. Then Apex Trader Funding 80% off all their evaluation accounts. Use promo code Mike, and Tradeify 33% off all their accounts. And to get the best deal with My Funded Futures, use promo code Mike. So as we come back over and look at the daily chart on the SPY real quick, we already alluded to the fact that we broke below this rising wedge. Now, keep in mind, a rising wedge pattern is normally a bearish pattern in this market. I've been waiting for quite some time for the gap to be filled that was left behind on May 12th. And to fill that gap, we need to come all the way down to 564.28. Will this pattern give us the breakdown towards that area? If we take a conservative measurement of this pattern, we just simply look at where the break took place, that would give us a price completion around 570.14. Now, that is not quite enough to go ahead and fill the gap, but if we continue to see more and more escalations over in the Middle East, we see crude oil prices rocketing up, that could be the catalyst that maybe starts to get us down here just a bit. MACD on the daily chart is basically flatline above the zero line, looking and getting ready to turn back down. As we come over and look at the 4-hour chart, you can see we actually have two candles closing below that rising wedge. Then the last candle on that 4-hour candle closed in the lower third of the range. Next, we jump over and take a look at the 30-minute chart. Notice the MACD indicator still showing no signs of firming up. We had that gap down on Friday. We came up, we filled a majority of the gap, but we did not completely fill that gap. Now, as I'm looking at this, where are we likely to go? We've already violated this zone that we had drawn out for many, many days at this point. Now, the fact that we're getting below it, that brings us into this other gap right over here, going back to June 6th. So are we about to come right back over here and fill that gap? Which in terms of fill that gap, we need a price point of 593.05. However, if on Monday we can stay above value area low at 595.80, I then do want to look for some upside testing. Maybe value area high could be a logical target, 599.33. Then right back up here to where we turn back down. I want to go ahead and draw this out real quick, put a zone around it, and basically candle body to the candle wick. That's going to come in about 601.24 to about 601.86. If we can break above that area, then I'd want to turn my attention back towards the gap being filled, back towards the high that we saw earlier this week, and then see, can the market make a new all-time high? Now, when we come over and look at the futures markets real quick, notice last week we did get the complete volume profile rotation down through the prior week's volume profile. Then this week, we had that big, nasty candle on Thursday night when Israel launched that offensive. And we can see that, look at the volume profile areas, 6,098 is going to be value area high. The point of control is going to be 6,079 with value area low coming in about 6,060.50. Notice, what do we do this week? We are closing outside of value. And that indicates that likely the next 1 to 2 sessions, we're going to come back and revisit value area low. However, pay attention. Since we're dealing with a weekly profile, one session would be 1 week in time. So within the next 1 to 2 weeks, and we got plenty of catalysts to get this markets rocking and rolling. But we also want to acknowledge the fact that we could be starting this A to B equals C to D pattern on the way down. The down leg would be the A to B leg. The corrective leg would be the B to C leg. And we get a price completion down here about 59.45. Now, I do want to let you guys know the levels that I'm giving out are for the new contract. We're in the midst of contract roller. So I'm looking at the September contract. So if your numbers aren't matching mine, I went ahead and rolled over my futures contracts over the weekend. Then as we come over and start looking at the daily profiles with the 30-minute chart, notice we had that pretty good run up. Basically 11 o'clock at night on Thursday, we put the low in. We had a pretty good push up all of London, even into the New York session in the beginning, and then boop, we pulled right back down. If we pull a Fibonacci retracement on this 30-minute chart, we measure from the low to the high. Notice we only came down to the 61.8 level. That is a logical area to look for the market to bounce. However, if we start breaking it, then I'm going to be looking for the 78.6 to come back and get tested right around 6,001. And if we break that, well, you know what? We're probably going all the way down towards that low. And that would basically also indicate that that ABC target that we talked about on the 4-hour chart is likely about to come into play. Now, when we come over and look at the QQQs on the weekly chart, MACD indicator still extremely strong. No signs of weakening at this moment. But something we do have a sign of weaknesses is look at the candle. We have a shooting star type of candle. We have a wick on the top, meaning buyers were able to push it up earlier in the week. Bam, they got smacked right back down. We closed in the lower third of the range, but we're still in the upper third of the prior week's candle. So yes, this could be an area where we start to pull back. But look at this candle that we had right over here earlier in the month. We had a wick on the top of the bottom. We closed in the lower third. Then whoop, we just simply went right back up. But this time could be different with everything going on in the Middle East. It's not just Israel taking a shot, then everything calms down, or Iran taking a shot, everything calming down. They continue to escalate it on an hourly basis. Now, we do have this gap right below us as well at about 488.00. Now, we also want to pull a couple fibs. We want to pull it from this swing low here all the way up towards the high. The 38% retracement would bring us right in the middle of that gap. 50% retracement would bring us to about 482. Then if we pull this for the entire move, this entire leg on the way up, and that has been one heck of a leg. If you look from the low to the high, we saw the NASDAQ rally 33.5%. That's a pretty good move without any, substantial pullback whatsoever. So if we do pull back, let's measure from the high down towards that 38% retracement. That would only be roughly a 9.5% correction. The 50% level could bring us down to 12.47%. And if we do get down towards some of these levels, could it be nothing more than a buying opportunity? Let me know your thoughts in the comment section down below. Now, as we come over and look at the daily chart, we also have that rising wedge. You can see on Friday, we broke below it. We also closed below that area. MACD indicator, slight bearish cross to the downside. 4-hour chart, kind of a little bit of the same. We have two candles below the lower trend line of the rising wedge. And look at what else we had over here on the 4-hour chart. Look at the MACD indicator over here compared to where it was up in this area. As price was pushing up higher, the MACD indicator was giving us a warning. Hey, hold up, momentum is starting to weaken to the upside. Then on the 30-minute chart, MACD indicator, still a bearish cross, no signs of letting up yet. And when we look at this, if we can go ahead and break the lows that we saw on Friday, we're probably going to come right over here, fill in the gap from the prior Friday, 524.71. That's not that far away. And again, with everything going on in the Middle East, and if crude oil starts to spike up, we can most certainly see the NASDAQ come crashing a bit lower. But if we can hold above value area low at 526.07, we kind of have a little minus development area. Let me go ahead and map this out for us real quick. That's going to be anywhere from a price point of 527.79 all the way up here to about 528.28. That would be a logical target area. If we breach through that, I want to target value area high. Then above that, I want to target the swing high with basically a candle wick to the candle bodies right up here from Friday, somewhere in the ballpark of 531.87 down to about 531.31. If we break that, then I'm looking all the way up here towards the gap being filled. Now, when we come over and look at the futures markets real quick, you can see off the high, we already had an ABC pattern completion. Now, are we about to form another A to B equals C to D pattern? That would go something like this. The A to B leg, the B to C leg would be this leg right here, the corrective move up. That gives us a price completion at about 21,553.67. Notice where value area low is, 22,043.5. That's all the way up here. And look at how low price closed. Now, whenever we close outside of value, I expect the next 1 to 2 sessions, we come back and visit that. But I do want to warn you guys, if we do not retest this in the next 1 to 2 sessions, quite often it's going to be multiple weeks before we ever come back and visit that area. Now, if we do get above value area low, I would want to target 22,088. Then above that, I want to target 22,195. Then above that, I want to target the high from this past week and then see, can we potentially make a run all the way up to new all-time highs? Also notice, if we're going to form this ABC pattern on the way down, that pattern is not validated unless we take out the swing low at a price point of about 21,692. Now, if you're looking for a quick scalp, one of the next targets I would want to focus on as we start coming back down towards that swing point would be this high volume node right here, 21,672.25. Keep in mind, I'm on this September contract. I've already rolled over my futures contracts. Next, we come over and look at the daily profiles on the 30-minute chart. Now, this profile is going to look a little erratic because on Friday, there wasn't as much volume traded on this current contract. But notice from Thursday, we did leave an untested point of control behind at 22,147.5. So if the market does turn from this area and shrugs off all the escalations going on in the Middle East, this is a logical target. Also, if we grab a Fibonacci extension tool, we measure A to B, B to C is a corrective move. Notice where that D point completes all the way up here, 22,199.25. That would be enough to go ahead and take out that untested point of control as well. But also, if we want to play devil's advocate real quick, we could also make the case that this is going to be an ABC pattern on the way down. And that would be something like this. A to B leg would be the down leg. The B to C leg, the corrective leg, would be the move up we saw on Friday. And then that would give us a price completion just below another untested point of control below us at 21,604. And that price completion would be 21,561.5. Now, how do we know which of these targets to gun for? Well, it's going to be simple. The ABC patterns are not validated unless we take out either the upper swing point up here or the lower swing point down there. Now, one thing I do like to do if you're trading this on an intraday basis, if I see sell setups, I'll still look to target the ABC pattern to the downside. However, that will be more of a runner target, not my primary target. Now, once we break the B point, then I can turn that into more of a primary target. But you can see a lot of the move had already been taken off once we get towards that area. Now, Sunday night should be action-packed with plenty of movement out here for us in the markets. And let me know in the comment section down below, do you think we're going to gap up on Sunday night in the futures markets? Or do you guys think it's going to be a massive gap on the way down? And if you guys want to understand the drawdown with Take Profit Trader, then make sure to watch this next video right here.